Welcome back to another edition of 3 Minute Thursday. I'm so glad you could join me today because today we get to talk about financing. Woo! Here we go. Let's talk about 6 methods to buying a home. 3 minutes on the clock, and here we go. Number 1, cash. Cash is always king. As a seller, if you have a buyer give you cash for the home, and cash doesn't mean a briefcase full of cash, it just means that the offer is not contingent upon a mortgage or getting financing. So cash is definitely always king. Is it always good for the buyer to put cash in? Not necessarily, but in a market where you have multiple bids on just about every property, a cash offer will stand out above everybody else. So if you have the ability to put cash in, it may be a smart way to go. Number 2, a conventional loan. A conventional loan is a type of mortgage that is not backed by the government. It is actually backed by private lenders. And there are different types of conventional loans. You have conforming and non-conforming. We're not gonna get into that in this episode, but we will later on. Number 3, FHA loan. FHA stands for Federal Housing Administration, and an FHA loan is a loan that is backed by the government. FHA loans are typically designed for low to moderate borrowers. That's a hard word to say. They require lower down payment, 3.5% or more. You can have a lower credit score. As of right now, 2021, 580 is the entry point for your credit score. Option number 4 is a VA loan, and a VA loan is for veterans. So if you're a veteran, you should definitely take advantage of this. And it's for your primary residence only. You can have 0 down payment. And because you can borrow up to 103% of the purchase price, it is a very powerful loan if you are a veteran. Number 5, USDA loans. A USDA loan is a 0 down payment loan, and they are offered to home buyers in less industrialized areas, more of a rural area. So if you're looking in a rural area, a USDA loan could be the way to go. Number 6, lease to purchase or rent to own. Rent to own or lease to purchase is when you rent the property out for a certain amount of time that you agree upon with the seller, and then at the end of that, you agree to purchase the property. It can be a very powerful way and a very creative way for you to get into the house of your dreams if you don't have all the money up front, or you're working on your credit score to get it up to a point where you will get better and more favorable interest rates. So lease to purchase is definitely an outside of the box type of thinking, and you just have to have the seller who is willing to take that on with you. So I hope those 6 help you out. I appreciate you tuning in for another 3 Minute Thursday. And if this helped you out at all, please subscribe, hit the like button, and get notified. And tell your friends. And with that, we are out.